Hello, my name's Craig Hughes. I'm a tax director at Brown Butler Accountants based in Leeds. Today, I'd like to talk to you about the new extended loss carryback rules. Let's start off with looking at an overview. The rules were introduced in the March budget this year, and have now been legislated for in the Finance Act 2021. And that's in Section 18 and Schedule 2 of the Act. They apply to both companies and unincorporated businesses. And what they do is they extend the loss carryback provisions to 3 years from the normal 12 months. For companies, they apply to losses arising in periods ended between the 1st of April 2020 and the 31st of March 2022. And for unincorporated businesses, they apply to tax losses arising in the tax years 2020-21 and 2021-22. There are various conditions that need to be met in order to carry back the losses, and there are some restrictions. There's a set procedure for making the extended loss carryback claims, and these depend upon whether the claim is de minimis in terms of quantum. And I'll explain more on this later. Let's start off looking at companies. The existing rules are that a trading loss can be set off against total profits of the same period as the loss, and then carry back any excess to the previous 12 months and set that off against total profits for that earlier period. There is an extension to a loss carryback of 3 years for terminal loss relief. Those rules stay as they are. What's now being introduced is that trading losses in accounting periods ending between 1st of April 2020 and the 31st of March 2022 can be carried back and set off against total profits arising in the previous 3 years. And this is done on a last in, first out basis. So you set off those losses against profits of the most recent years first. Now, there is a cap of 2 million on the losses which can be carried back to the earlier 2 years of the extended period. As far as the 12-month carryback is concerned, there is no cap on that. That remains as it is at the moment. For groups, there is a £2 million cap across the whole group. And the £2 million cap applies to each loss-making period between the 1st of April 2020 and the 31st of March 2022. So let's look at an example. Here we have a standalone company, and this is a scenario where the cap applies. So in the current year, we have a trading loss of £3.5 million. The previous year's profits are set out there. In the immediately preceding year, we had 1.2 million of profits. The year before that, 1.6 million, and the year before that, another 1.2 million of profits. So let's look at how those losses in the current year of 3.5 million can be utilized using the new rules. So we can carry back to the immediate 12-month period, £1.2 million, uncapped, and that covers the profits arising in that period. We're then into the new extended loss carryback rules. So we can carry back £1.6 million to set off against the profits arising in the second immediately preceding year. And then going back to year 3, we can now only set off £400,000 against that period because we've used 1.6 million against year 2. The cap is £2 million, so we only have £400,000 left. The remaining loss in the current year then of £300,000 is simply carried forward under the usual rules. So for unincorporated businesses, it's very similar, although clearly there are a few differences because of the way in which unincorporated businesses are taxed compared to companies. So with the existing rules, subject to certain restrictions, a trading loss of a tax year can be set off against the general income for the loss-making year, the previous year, or both years. Now, there are additional rules for the first 4 years of trading and also for terminal losses, and they remain in place. Under the new rules, trade losses in the tax years 2020-21 and 2021-22 can be carried back and set off against profits of the same trade in the previous 3 years on a LIFO basis, so a bit like with a company, i.e. you take the most recent year first. Again, like with the corporate tax relief rules, there's a cap of £2 million for losses carried back to the earlier 2 years of the extended period, and that's for each period of loss. There is no cap on the 12-month carryback, and the cap applies for each loss-making period. So let's look at an example of how the loss carryback provisions work for unincorporated businesses. So here we have a summary of the profits and losses made in a 4-year period. We had some trading profits in the first 3 years and then a big trading loss in 2020-21. And we also have employment income of £50,000 in each period. So here's how the losses in 2020-21 could be utilised. First of all, we'd set £50,000 against general income of 2020-21, i.e. the employment income. We can carry back £550,000 and set that up against general income of 2019-20. That's under the usual rules that we have. We're then moving into the extended loss carryback provisions. So we can carry back 1.2 million to set off against the trade profits. Remember, it's the trading profits only we can set off under the extended loss carryback rules. So that's in 2018-19. And then we're capped now for £2 million, so we can only carry back 800,000 against the trade profits of 2017-2018. Under the extended loss carryback provisions, we're using 1.2 million against 2018-19 and 800,000 against 2018. That's the £2 million cap being utilised. And we're left with £400,000 worth of losses in 2020-21, which we simply carry forward under the usual rules. There is a set procedure for making claims, and they're slightly different for companies and unincorporated businesses. For companies, the claim has to be made within 2 years of the end of the loss-making period. For a de minimis claim, and this is where the claim is for £200,000 or lower of losses, that can be made outside of the corporation tax return once the accounting period is ended and the loss has been quantified. And there's a specific form on the HMRC website which allows you to do that, so you don't have to wait until you submit the CT 600, etc. to HMRC in order to make that claim. For claims which are not de minimis, i.e. over £200,000, this is done on the CT 600 for the period of loss. So losses of more than £200,000 have to be carried back and claimed via the usual tax return process. Please remember to tick box 45 of the CT 600 of the period of loss to say that you are making an adjustment to an earlier period. This should speed up the process of that claim being processed by HMRC. and also include a narrative on the tax computation explaining that you're taking advantage of these new provisions to carry back the losses. Now, for group claims, it is more complex. Groups need to appoint what's called a nominated company to allocate the loss carryback across the group and also any de minimis claims. And groups also have to submit what's called a loss carryback allocation statement. And this shows how the losses are allocated amongst the group companies. For unincorporated businesses, a claim for 2020-21 has to be made before the 31st of January 2023. For 2021-22, the claim has to be made before 31st of Jan 2024. The claim is normally made in the tax return. However, a standalone claim can be made where the claim affects more than 1 year, which will often be the case. And the standalone claim may be made as soon as the basis period for the loss has ended and the loss is quantified. Now, I hope you found that brief overview of the new extended loss carryback rules helpful. If you do have any questions, please do not hesitate to contact us. And thank you for listening.